following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
All right. I think we're good now. Sorry about that, folks. So, Janet Yellen caused the party to continue yesterday, is what I was saying. Caused the dollar to go down, notes to go up, and the market obviously is extremely happy when it gets cheap rates. That's been the course of action. No matter what the forecast on the economy is, lower rates means pile into equities for some reason. So, we're taking a look at the dollar. Quickly first here, we're looking at the June contract when it comes to this, and that close, go up into that neighborhood, close below, go back and retest. We talked about that yesterday. Talked about waiting also until after some announcements from her were out. Didn't know she was going to get that dovish, but that's the way the cookie crumbles. And we're going to take a look at a couple other instruments here relative to this particular announcement. So here's the dollar first. And again, here's the weekly on the dollar on the June contract, sitting near the lows again. Tom's been pretty good on this one. And don't want to stand in the way of that trade right now as far as the lower dollar goes. We're going to hit the notes next. Here's the 10-year. As we look at this, we talked about this 129, talked about yesterday, put a gun to my head. I'd rather be long than short, but thought we were going to kind of churn around here. I don't know if, what she said relative to what some of the other Fed guys are saying, which are not dovish. Don't know if, this is going to actually continue or not. But again, you got a trading opportunity now. You're above profiles on the daily. You're out of that bottom range on the weekly. And what do you do now? I think what you have to do now is you have to wait for a pullback. 129.12 is going to be support on the 10-year right now. Here's the 240s. And I hope you guys are seeing this on my screen. A new short-term profile attempting to appear on this. We're going to go into our scanner. We're going to see what's going on here with the cell structure really quick. We're going to go into the futures section. And I'm going to show you the Forex section in just a second. It's just amazing what that looks like. But we're going to take a look at the 10-year, and there's that new profile attempting to appear. A little bit of a target situation for short-term guys. I had to adjust. We do a lot of business with institutional guys, and the Bloomberg legal team seems to always be concerned about everything. So had to adjust some rhetoric in the some of the texts that I send to them. It's just amazing. The word may, could, you can't use should, things like that. Always leave the door open. They're not taking any responsibility over there. But had to adjust some rhetoric on the yellow peelback situation. I used the word profits, and that's a bad thing in their book. They want no responsibility. So as you look at that yellow peelback, always look at that as, a chance to take some profits if you're long. Got the green cell, been going on for 7 bars, and boom, here we go. So it's kind of a wait and see, at least scale out a half of it is what we generally tell people. So that's the situation on the 10-year. And we're going to look at the S&Ps. Here's the cell structure on the S&Ps. Again, balanced area on the weekly, all green across the board as you look at the rest of the time frames there. But let's take a look at the Forex really quick. And again, Australian dollars has been a really good trade. I think it's got a lot left in it. It seems to be reacting extremely well when there's some bullish news for it, and just basically going sideways when there's any bearish news. Gold pulls back. I mean, it's basically in a range. U.S. dollar caves in. This thing gets on the horse again. Case with the euro, similar situation. I'm going to go down into that. There we go. Again, all arrows up in green, mostly across the board for that thing. So let's take a look at it. And let me see if I can get and maybe somebody can let me know if you're not seeing my charts again. Sometimes when I bounce around to different applications, it causes trouble in the den. There's always trouble in the den. It's a scary place. Okay, let's take a look at the Australian dollar here. All right, thanks, Tammy. All right, as we look at this, come on. Well, okay. I hope that changed. Here's the Australian dollar. Here's that weekly trade. And, again, talked about just, what's the MO here for this one? The MO for me is almost up to 80. I really think that's going to be easily attainable. And I'm not basing this on, hey, it's gone down too far and it's on sale. I'm basing it on, and again, we were up at the 106 area on this thing. What? Good gracious. 105, 106. And that's the time that I actually picked to go to Australia, which is, I'm an indicator in itself. So just when I go on trips somewhere, remember those are usually the high prints that I'm paying. But as we look at this, the reason we've talked about this a lot if you watch the show, it's acted so well in the face of the last half a year or so, pretty damaging information as far as the Australian dollar goes and commodities and things like that, and China, of course. And I think this is just the first part of this move. So, again, getting back above, we talked about getting back above 71.69. We're 500 pips higher now. But, again, when we got above this weekly profile and then retested it, man, I just think there's a lot more juice left in this, as Tom would say. And, how do you trade this now? And as we look at this, on the daily, we talked about trying to use this as support, and then possibly that 74, let's see, what was it? 74.39 down into this DMZ. That was kind of the next place. This is a great example right here. I want to talk about this area at 75.42.43 when we come back. It's a great example of taking a stop. You didn't know if this was going to come down, broke out again, turned the rinse the same way. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We were finishing up with the Aussie dollar. Just want to get back. That's the wrong chart there. Here we go. Okay, so really good example when it comes, from a long-term trading standpoint, that weekly we talked about was very, very, very powerful, 74.39. I think that was the weekly for high, 74.39, yeah. But, as we kind of, use the next time frame down to kind of gauge the trade up, there's that. I mean, again, let's just walk through this. A little bit of education today. There's that yellow peel back happening. That means a new profile is going to more than likely appear. And as we look at, support for this or breakouts for this after that, that's where you kind of scale out of some of your position. Just blindly do it. I mean, it's always a good idea, historically speaking, as far as we've looked at everything, and we've looked at a lot. So there's a breakout. There's a chance to do some longs again. You also have the 240s to kind of look at, also uses an expansion of the profiles based on volatility to kind of get. I'm sorry, God, we have a caller. Dave, are you still there?
Yes, sir. Good morning, John.
Oh, hey, man. I forgot you were on the line. How are you? I'll come back to the Aussie dollar, guys.
No, hey, the Aussie dollar is fantastic for within the context of the question I want to ask, because I've been trading the Aussie dollar quite a bit lately. John, I've been hitting the TFNN site a lot, and I've been watching your videos repeatedly. Good stuff. And so here's a question I've got for you that I would imagine some of the other newer TAS profile users, and trying to figure out a way to incorporate that into other trading scenarios. Mm-hmm. So it goes something like this. From looking at your S&P futures, long-term as well as a short-term video, basically you reference the breadth charts as, and if green is above red, to use your terminology, it's better to be long than it is to be short for obvious reasons, and that acts as the guiding light for then determining what resistance levels you choose to buy support, whether it be short term on the 1 hour or maybe longer term on the daily.
Can I make a footnote to what you just said?
Please.
Okay. All All right, that's a great question. And anybody who's in the den or listening to this show, the premise of a lot of things that we do is try to block out one side of the marketplace. And what Dave's saying, and I think we're probably going to end up getting into this together, is as we look at that Aussie dollar, the reason that we were looking at, okay, let's try to either buy breakouts or buy support because, you know, as Joey said the other day, if you kind of get away, if you kind of start trading these ricochet things against what you think the long-term MO is for that instrument, then you kind of get mixed up, and sometimes you're short on a short-term kind of contra trade when you really have, and maybe it's going against you, and then you're kicking yourself because you know the trend or the side of the market you should have blocked out, really based on looking at that Aussie dollar situation. You block out the short side and you're looking at buying support or buying breakouts. And you know, that, Dave, that same principle goes for a lot of times we're looking at breadth situations. I mean, if you everything I've said lately on the S&Ps is like, okay, we're probably going to churn around a little bit here. I didn't expect Yellen to come out with those comments yesterday, but again, the long-term breadth situations have been positive. So it's almost like I don't want to pile into shorts right now based on that alone. So go ahead. Go ahead. I'm sorry.
I mean, and that hits the nail on the head because, you know, just from a other trading pattern scenario, the Aussie dollar had a nice sell guard in it right up until the time Janet Yellen decided to start talking.
Right, right.
And blew that pattern out. And I'm like, I was watching, I'm like, oh, no, she's going to do it. Oh, you watch, boom. My stop gets hit, and there I go. You know, it's like, and as you know, as you're to use one of your terms, that's how the cookie crumbles. But you know, that's true for you.
I think Obama and his team have got her family in some closet, handcuffed somewhere. She's gonna keep saying what they want her to say. You know. So.
Yeah, no doubt. Yeah, no, I am in complete agreement with that one.
Gotcha.
But within the yeah, because I've listened to you enough to know that I think you and I are of the same mindset politically. But anyways, getting back to trading.
Yep.
So I'm going to make a statement, and you tell me whether this is, like, foolish or whether I'm in the game, you know, because, again, this is just, you know, trading, as you well know, it's always probabilities. So here's my deal. So applying that same analogy to, you know, to locking out one side in your mind. In other words, do we want to be shorting this market, or you know, as Tom would say, what's the force? Do we want to be shorting this? Do we want to be going long? And in that being the case, the S&P, you know, depending on your time frames, you know, has the breadth chart, which gauges the number of stocks above profile unfair highs versus number of stocks unfair lows versus the ones that are in between the unfair high and the unfair low. So taking that statement and applying it to a single instrument, like a currency, for example, where there's only that one instrument, obviously. So in that case, does it make, from trying to determine, let's say you don't know anything about patterns, you don't know anything about swing point analysis, and all you know about trading is TAS. If, let's say you're really new to this and that only thing you ever knew was looking at this program. Right. Does it, I mean, in terms of the MO, is it reasonable to say, okay, if I want to be a trader of the daily time frame, then the MO, to use that terminology, would be dictated by the weekly? Is that, I mean, if we're above profiles on the weekly, do we then look to the daily to buy support?
That's,
you know, does that make sense?
That's a great question.
You follow what I'm saying?
Yeah, that's a great question. And, you know, let's just go back to the Aussie dollar. I'm on the wrong screen here. Let me go back to that. Actually, let's go to gold, because I was going to talk about gold. We might as well talk about it with you on the phone. So here's gold. Here's the weekly situation. Here's that POC. You know, we're kind of in a defined uptrend, even though we've got a new balanced area. I don't know if you're seeing this. But, you know, that POC around 1203, we hit a low of 1206. This is a very wide profile when it comes to gold. It's, my God, what is this? It's an 8.5% wide profile on the weekly. So, man, that's a lot of volatility. It's predicting a lot of that volatility. Here's the top of the mountain, the POC. So, again, I don't think we can disengage from you know, the concept that the gold is in an uptrend right now. and we're looking to buy support, even though we're within this long-term balance area. So that's why I was looking at that. Okay, that's why we were looking at 1245 before. This is the daily, kind of the next time frame down. Now, I don't trade on super short-term inflection points. I use them as a guide, and a lot of our automated systems kind of use those as confirmations, if you will, just to kind of clear levels to say it, to say it's okay to be long and not okay to be short and all that. But here's 1245. So that was kind of a support area. It didn't work, failed, boom, okay. The next thing down, we're looking at that 1203 neighborhood, considering that we're still kind of in, I don't want to be short gold right now, even though there was an opportunity. Can you stay on, Dave? I want to keep. Okay, great. Guys, we'll be right back. I hear the music.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Dave, are you still with us?
Yes, sir.
Great. I'm going to pull gold back up. I just had my e-signal reboot on the server, so apologize for that. Here we go. We're back up. So, gold, in my opinion, even though we've got a big, wide area here, we still got to look at this as, we broke out. We kind of got a new profile here. We're edging up as far as the long-term weekly goes, and I'm still looking at this as a long situation. So that's why we broke 1245 and a half or whatever it was on the daily. That was the sign that, in my opinion, since this is kind of regulating that trade up, you know, I'm wanting to, you know, I'm wanting to save a couple of points here, and I don't want to, you know, suffer the entire fair auction of that very wide $100 an ounce profile on the weekly. All that's saying is, hey, buckle in. You're going to have some volatility. I'm going to look at this daily to kind of regulate that. All right, because I'm generally long-minded on the gold here, based on everything I just said. Now, yesterday, and maybe the day before, we talked about it. I'm not really going to feel too rosy about getting long gold again until we have something to lean on. And there's nothing to lean on that weekly profile except that 1203 neighborhood. And then, you know, there's some initial targets here you can play around with on the daily on the 1245 area. It reached a high of like 1243 and a half yesterday. So got into that neighborhood. We backed off. Today we've reached high at 1245. So these inflection points are really, really powerful. And it's just, you know, let the market come to you. And what is really cool here is that now we've got a new inflection point and a new profile, and that unfair low is at around 1232. So now, how am I looking at trading gold? I'm looking at that now as a new inflection point to buy support. I mean, in my mind, I'm trying to block out the short side. So this kind of next time frame down is kind of regulating this situation. Even though we've had a profile edge lower, I'm still trying to keep my eye on the prize that, in my mind, I think gold has a chance to continue to edge up. And I understand that, you know, what happened yesterday, the rates, I mean, gold is a kind of an inflationary hedge, but I think it's acting very well, even though Yellen is saying, you know, whatever she's saying. I don't understand what she's saying, but you know, in my opinion, gold should have gotten a lot weaker, and it actually rallied, and I'm kind of liking that we pulled back into a new inflection point here. So on the Aussie dollar, going back, I guess maybe to your question here, you know, I'm looking to buy support or buy breakouts, buy support, buy breakouts, and the daily's regulating that weekly trade up. If you if that answers your question.
When you say, I think so, John, but you're.
Go ahead.
I'm not saying this to blow smoke. You're a lot smarter than I am, so.
Go ahead. No,
I'm trying
man.
to
Go
follow
ahead.
you here, and so when you say that the daily, because I've heard you say in other contexts, well, you know, the 240, and I think more in terms of the S&P, the 240 is the regulator of the trade. Now in this conversation, you said that the daily is the quote unquote regulator of the trade. My interpretation of this, because I'm trying to interpret your statements here, is that let me just make a statement. You tell me if I'm understanding what you're saying here, because forgive me, I'm trying to follow you here, honest.
Okay. Yeah.
So we're looking at, like, for example, I guess we can go back to the context of, you know, the Aussie dollar conversation, looking on the Forex. Once, you know, I mean, currencies and instruments generally, you know, forgive me for making a really stupid, obvious statement, but they're either moving up or they're moving down or they're consolidating. You know, obviously. So
I think that's fair to say.
Yeah, that's probably the dumbest, simplest statement of the century there, I realize. Forgive me, but I guess what I'm saying is this. So, you know, like, for example, the Aussie dollar had been moving down for a very long period of time, goes sideways for a while, and then breaks higher. So when I look at, and I guess I'll just use the Forex Aussie dollar, even though I personally trade the futures. So just looking at Forex, okay. So, you know, in the week of March 7th, okay, we moved above the weekly profile on the Aussie dollar combination. So, okay, my understanding, okay, that's the, you know, unfair high on a weekly is a strong point of support. Okay, so we say to ourselves, it's better to be long than it is to be short on the Aussie dollar. So then my question becomes, do we just stay on any given time frame? In other words, in this case, the weekly. So now we're above. and then use the profiles on the weekly to, if we're, as we're moving higher in this case, and the new weekly profiles come out, set our stops below the unfair low, or is it make more sense to maybe go to a shorter time frame, since we don't have a monthly in this case, for, let's say the daily, and when we're above unfair highs on the weekly, we then look to the daily profiles and determine where to buy support in that case and how to set our stops, or should he just stay with one time frame as we're trading?
Well, that's a great question, and here's my answer.
Is it?
If you look, there's actually, there's a couple of ways to decipher maybe what you're asking, but one of the things that we've been talking about, let's just stay on the Aussie dollar for a second. We've noticed that it's really been fighting some fundamental factors out there. And, that was, I always, if you watch this show enough, you'll know that I'm always looking for anomalies going on in the puzzle to be able to possibly find things that are raising their hand and saying, hey, you know what, I'm acting a little different here, and I'm not exactly sympathetic with everything that's going on with what I should, and I'm not doing what I normally should do in this instance, okay? So in the Aussie dollar, I was looking at this as more of a longer term, when I look at longer term situations, one of the ways to trade them is just to kind of trade it a little light and then be able to add to it if it starts showing some green shoots, I guess, in this case. So the start of this trade for me was like 71.69, getting at least back in the balanced area after all the China stuff, after all the commodity stuff that was going on. Crude oil starts, showing some green shoots. The gold starts moving. So it didn't necessarily have to really completely close or start trading above profiles here like it did back in, May of last year, actually. And if you're kind of looking for a longer term move, remember always these weekly profile inflection points, they kind of take precedence over daily, over two down the line. So the order of importance is always, weekly first, in my opinion. Those dailies are great to trade off of. And in this case, I try to, this is the way I do it. I try to keep a core position on. And I've learned that over time. And Joey was talking about this. If you leave something on, then you're reminded of what your long-term MO actually is. Can you hang out, or you want me to just keep rambling after? If you can stay on, that'd be great.
If you don't mind me staying online,
yeah,
I'll
man.
do it.
Yeah, I think this is a great question. All right, we'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Dave, you still with us?
Yes, sir.
Great. All right. So we were on the Australian dollar. I was just looking at gold here. We were talking about the Australian dollar. Or we backed into gold? I can't. We were talking about both of them. Which
doesn't matter. It's, what
okay.
I'm trying to get around is just a general conversation that you would apply to any instrument.
Okay. Yeah. So, I think we were more so talking about gold here. Let me just go back to it. So, we talk about a lot on the show, and I think one of your questions that we were talking about was, blocking out one side of the marketplace and then being able to kind of use some different time frames to kind of regulate the trade. But what I was saying about we were talking about the Aussie dollar. Let me go back to that. I'm sorry, I'm having brain cramps this morning. This was such a long-term kind of sea change event that we thought was going to happen. A lot of times I was talking about, what Joey had said, which was so, this guy's managed institutional desks for JP Morgan, HSBC, Deutsche Bank. He's sold his own trading company for a lot of money. We're in the process of doing some things together, and hopefully Tom will be right in there with us. I'm hoping and dreaming that when we do a couple of things here in the very near future. But one of the things that he said the other day was, let's leave some shares on or some contracts on so we don't get confused about what the long-term MO is for this particular move. Now, these are, again, some sea change events, in my opinion, that have started happening, changes in the crude oil tone. Not that it's going to go back to $60 or $70 or $80, but, some things that have, shown themselves. The Australian dollar, in my opinion, showed itself pretty early. So keeping some contracts on no matter what, keeping that core position on to not get confused with, what your real MO is here. And those, core contracts on would be on in this instance, in my opinion, up until you got a breach of this 74.39. All right. Now, as this thing acts well, I'm looking at the dailies and looking at these, breakout situations by support to continue to get back to a full position. All right. So in this case right here, I mean, this was a little away from the inflection point here, this low on the Aussie dollar, 74.15, that 73.90. I mean, we got close to it. I personally actually missed that. I feel like an idiot, but that's where you kind of want to get back to full position. All right. Then you got some chances to stop out. So a lot of times, I'll keep a core position on to sum it up again, and then play around with more contracts. And
adding or subtracting from, or adding or reducing your position based on a smaller time frame and
Correct.
where that price is relative to the profile. So is it fair to say that the MO, that, use your terminology, the MO, the driving MO, and I agree, because I believe that, especially in trending, if you get in soon enough, that time in the market pays dividends. If you get it right and you get in early enough, obviously. So in this conversation, because I like to trade like that. I mean, I do a lot of short-term trading also, but generally I like to do more long-term than short-term. So is the MO in this case, John? I'm sorry to keep belaboring this.
Go ahead.
Like I said, you're much more. I'm not trying to blow smoke, but you're a much more experienced trader than I am. I've only been doing this since I met Tom back in 2010. Is the MO in this case would make most sense because the weekly profiles have more meaning than the daily profiles from a support and resistance standpoint. So does it make sense to, on the weekly, to look at a weekly on any given instrument and say, okay, self is above profile unfair highs, so therefore it's better to be long than short. And then at that point in time, say, okay, it's time to go long. Put in my case, I like the future, so I buy a contract, let's say, and then as I trade above and below profiles as a strategy, as the instrument trades above and below profiles on a daily, would then be the determining factor of whether I would want to add another contract once I start trading above the unfair highs on a daily, and then if it's and then set a stop below the unfair lows of any given daily time frame, and continue that thought until such time as the instrument trades below a weekly profile, and then it's better to be short than long. Is that a fair strategy? Is that an accurate strategy?
Yeah, well, for this one, there's two strategies, and I'm glad you said that. I talked about, and I'm not suggesting anybody go out there and trade a bunch of contracts and keep, trading can be dangerous and all that. And if you're just trading one contract, a lot of times that weekly move, I'm showing the Aussie dollar again, these daily unfair lows, just like on gold, all right, we breached it at 12.45. If you're trading one contract and you're long, there's no downside in taking a stop below 12.45 and then getting back in gold again above 12.45. And in this case, now you've got 12.32. Why is that? Because if I go back to gold, and I'm coming back to your point in a second, Dave. If you go back to gold and you're just trading one contract and you want to be long, and that weekly is kind of determined that you're blocking out the short side, you've had that 12.03 general area pullback after that breach. So 12.45 breach, boom. All right, the daily has caused me to sit on the sidelines for a while, even though I'm still blocking. I'm not going short. I'm just saying, you know what? I could either get a better price lower, or I can buy the breakout again, at least getting back in the balanced area. Now, I think this is really cool. There's two things that are really cool here on gold. One of them is price opened up in the balanced area. The balanced area is not above price. If you watch this show enough, you know that if price is below the balanced area and it's kind of like a profile's appearing above, that's actually bad. That's really bearish. All right, this one, price appeared, even though the profile is lower, price appeared within the balanced area, and I'm okay picking a battle here at an inflection point. Remember, these are the envelopes of the balanced area. These are the envelopes of the outside envelopes to the fair auction, right? And that's why, if you're trading one contract, you're looking for the market to come to you, and that means going up or going down. And when we're kind of in, la-la land here, before in this area, I'm showing on the charts, this is kind of a do-nothing situation. I mean, you're going to be kicking yourself because, wow, I could have made 40 points on the short side. Well, that was the riskier trade, in my opinion, because, for short-term guys, obviously there's something there. But, you know, sticking again with what Joey was talking about, what's the long-term MO? And, you know, let's just try to block out one side of the marketplace and wait for the market to come to us. So that's the situation on gold. I'm going to go back to the Aussie dollar here now, Dave. And
but hang on, if you don't mind, stick with gold for a second.
Okay, yeah, sure. Go, you want to hang out and just finish up the show with me?
I'm taking
That's great. These are great. These are killer questions. Thanks for staying on, actually. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Dave, you still there?
Yes. Okay,
great. Actually, interesting question. Somebody in the den just threw out there. You know, they were saying it's in a brutal downtrend. You know, I don't know what is defining that downtrend. I guess this would be maybe drawing a trend line or something. But you know, I kind of throw out a lot of that. Sometimes I throw out a lot of the classical analysis. I just look at these profiles because it allows me to know, you know, when it's okay to block out one side of the marketplace. The Aussie dollar could come down, and that's what stops are for. But, we've had from 68 to almost 76 or whatever this is. This has been, what is that? Is that a 15% move?
Approximately.
Something like that. And I don't think it's over, so, and I think it's fought every reason to at least go sideways or go down. And, I'm still kind of sticking by 80 as a long-term target. But Dave, your question was, and we got about 2.5 minutes left. I use this as a roadmap. I mean, I'm not the smartest guy in the world, and I need sanity when I'm trading. And I've thrown a lot of insanity in my trading in the past. And this system that I'm looking at now with these balanced areas and these inflection points, there's a couple of things it causes me to do, Dave. It causes me to be patient, all right? And it causes me to not be all over the place, shorting something one day and going long the next and all that. I mean, I trade this basically as a roadmap, or using it as a roadmap for me to, again, not on a very short-term basis, but be able to kind of run my own personal portfolio. And if I want to get in there and kind of scalp some things, I can kind of traverse into lower-term time frames. But even if I'm scalping, Dave, I'm always looking at, is the leverage to buy support and buy breakouts on the Aussie dollar right now, or is it to really sell breakdowns and sell resistance?
Right.
And in this case, I mean, I'm just looking at that weekly. Okay, we some people have had to cover this thing that have been short. So I'm thinking, all right, you know what? I'm not going to fight that. I'm going to buy support and buy breakouts. And we've broken above long-term profiles. We've fought some fundamental situations. And I'm going to use these inflection points on my daily specifically, I can absolutely drill down into some. These 240s are killer, but I'm just kind of looking at this as a long-term situation. I want to let this thing breathe. I've had a bad habit, just like everybody out there, taking trades off too early. I want to leave. Yeah, I want to leave. I want to leave something on, and if I get stopped out of it, that's okay. I'm just telling you what's going through my mind. So
the thing that I'm trying to do is I'm trying to coach a couple other people, and I'm convinced that this profile scanner incorporates a lot of what Thomas taught me. You know what I'm saying? I know I don't have time to.
I think it all fits together.
It does. It fits together in a very in a relatively simple. And I'm a big believer in keeping it simple.
Yeah.
I'm convinced you don't have to overthink this thing. So let me hit you with one last question.
You've got so much of the game licked by just even saying that and admitting it. You don't understand.
And I've lost. I'm embarrassed to say how much money I have lost because I've tried to overthink it. Well, this system's, this says go this way. This says go, and I'm and I'm over it. So, John, would it be possible to give you a call at your office there sometime?
Yeah, if you can give me till after lunch, that'd be better. I'm scrambling here right after the show.
Thanks, John.
But yeah, Dave, thanks, man. Great questions. I think everybody benefited from them today. And guys, we'll pick it back up again tomorrow. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.